So when it comes to investing, clients want exposure a couple different ways. So we have a venture group and team doing kind of traditional early stage venture in the blockchain space. And then where I sit is kind of heading up our research efforts on the token side of things, putting together token portfolios, trying to think about where and how does value get generated, and how does it flow back to a token, if there is a token, and is that sustainable? And then on the building side, we're kind of big into the real world asset tokenization theme. A product that you may be familiar with is called Benji, which is a tokenized money market fund that was actually started several years ago when rates were nothing, and now hit the timing right, is in market now and is one of the largest examples of institutional real world assets on chain. We're on a few different chains there. And then we also run nodes on close to 10 different blockchains. So in short, kind of doing a lot, but really with this ethos and this mindset of this asset class, this industry, this innovation is here to stay. So how do we set up a business really with that eye for playing the long game here? And really feeling like it's important that we invest, we build, running nodes. We're just participating in consensus to support these ecosystems. So we've early days.
I love it. Tanya, you got intro for us?
Great, yes. So is this working? Hello? Okay, that seems better. Yeah, so I grew up in Venezuela. I came to the US to do a PhD in economics here at Columbia University. So I started my life as in the academic world studying currency crisis. I went to work for the International Monetary Fund and then moved to the private sector at Citigroup initially, and then I spent a good 13 years in macro hedge funds. They're big institutional macro hedge funds. I started at Soros. I went to Larian Capital, then Citadel, and then Alpha Line Asset Management. My love for crypto, given my background in Venezuela, started quite early, but I didn't see a path to move into the space until finally in 2021, I decided to quit my job and start my own fund. It's called Senda Digital Assets, and it's a directional, diversified, risk-managed liquid token fund.
I love it. And I'm John Devine. I'm from Blockfills. We're a market maker to institutions in the space. We serve on spot, options, futures, structured products, perpetual swaps, lending and borrowing, those types of markets. So let's get into it. Chris, you're piquing my interest here. Real world assets. This seems like it's a theme and likely to continue into 2024. Can you give us some more color on the real world assets you guys are working on and how to tokenize those things and what the offerings are for the marketplace?
Sure. So, one question we always get asked is, hey, what's the killer app, right? What's the big use case in crypto? And I think one of the best things that the industry can point to is stable coins, right? And really that is a tokenized real world asset, the US dollar and other stable coins and other currencies. And then you can imagine way on the other end of the continuum, right, tokenized real estate or very illiquid assets, or maybe you do intellectual property, or there really what you can do is almost infinite, right? But in terms of low-hanging fruit to that end of the spectrum, we think there's a lot in between. And so we started with Benji, which is a tokenized money market fund, decided to do it, the regulatory compliant way. It is a security token. And so we're working to enhance utility of that token. But what I think we're going to see more of is not just tokenization of TradFi assets like funds, but tokenization of other assets, and then really expanding the utility of these tokenized assets. And I think crypto and DeFi in particular has done a great job at building a new set of rails. But right now, the only thing that can flow through those rails are crypto native products, that long tail of alts. And so having tokenized real world assets, trying to get those onto some of those rails, I think unlocks not just cost savings, which is what we've certainly realized. Why did we tokenize a fund? It's not just a 10% differential; it's like a 10x differential for us, right? But the beauty of crypto is not just cost savings; it's how you expand and create new use cases, and new revenue lines, just things that you can do that you weren't able to do without this technology. So those are the things where I think we're going to see the industry going, and I think that's where it gets even more exciting.
Yeah, go ahead. Please, Tanya.
I have a little follow-up on that. I think the tokenization of real-world assets are going to open new markets, and that's important. Push liquidity into markets that we don't have liquidity now. So I know people tokenizing wine, for example. Clearly, they're tokenizing ownerships for art, the art market, and things like that. So I think it's very exciting, and it's clearly opening up a lot of avenues. But I just want to push back in one little thing. People say, what's the use case for crypto? And then they go, well, let's tokenize real world assets, Ethereum, whatever. Let's look back at real world assets and all that stuff. That's great and exciting. But let me just take you back a little bit as the macro person that I am. At the end of the day, when Bitcoin came to our markets, it represents decentralized money. That is not a little thing. That is a huge use case. Take it from someone like me. I grew up in Venezuela. In my country, we've had hyperinflation, currency depreciation, economic implosion, and the way the government used the currency to rebalance their books. So we export oil, we import everything else. So whenever the government runs into trouble, fiscal or external, they just depreciate the currency and rebalance their book. That's great for the government, really bad for everybody else. There was no way out of that. And now crypto, particularly Bitcoin, of course, offers a solution. So a lot of countries like mine that live with governments that dilute the value of their currency now have a way out. And we should not forget that's an enormous, important, central use case for crypto. And let me just say, if you think this is just Venezuela and Nigeria and Lebanon and Egypt, that's not the case. Because even in developed markets, in the best, perfectly run central bank that you could ever have, the mandate of this central bank is financial stability as well as inflation. It's financial stability and it's employment, sometimes explicit, sometimes implicit. What that means is when you have a pandemic, when you have a war, when you have a recession, what is their job is to inject liquidity and cut rates. And when they do that, that's great for the economy, that's great for the job market, it's really bad for your savings. And now you have crypto.
Well, now I want to invest in your fund, Tanya. I mean, that is
Please do.
getting me pumped up. So, going on that theme, Tanya, I'll stick with you here. Going into 2024, you're talking to institutional investors who are looking at your fund, and what do you think is going to be the catalyst for these types of players to come into the market, to kind of cross that Rubicon, so to speak, and put some stake into this place?
Sure, so I see three catalysts for 2024. I'm very bullish for the coming months and year. The three catalysts are, one is the regulatory change. Clearly, what everybody has in mind is the Bitcoin ETF. That's going to bring more legitimacy to the space. That's going to open the door for more institutional money to start looking at it, although clearly big institutions already are. But I think that's going to be a big step. However, if you look at our recent few weeks, we've had 4 really good pro-crypto rulings. We had the Grayscale ruling, the Uniswap ruling, the fair value accounting. I'm missing.
That's a big one.
There are a few that have been really, really positive. Obviously, the Ripple ruling. So they're all positive. So the regulatory headwinds are, I think, going in our direction. That's one. Second, the macro headwinds are going in our direction. We had a really good CPI print today. Rates are lower. Chances are the Fed is not going to hike anymore. And if you look at liquidity, not only money supply, but broad liquidity, what we see is it's not contracting anymore. And in some places like China, it's actually aggressively expanding. That's great for crypto. And then finally, and this is perhaps a little controversial, but coming from where I come from, I think that particularly in the third world, when you have geopolitical risk, it's actually good for crypto, because those around the world that cannot easily open a US dollar bank account, they can access things like Bitcoin and the like. So I think that's also another catalyst.
Chris, you got a comment on that?
Yeah, first of all, I love that list. I agree with all of those. And one other one that I would add too is, on the innovation pipeline and what we're seeing there, and there's that kind of meme almost, right? You build during the bear, and so much building has happened, and the developer count, did go down. I think this is the first, bear market where we did see a dip in the developer count, but not by nearly as much as prices did. And when we're close to startup teams and actually innovation at the ground roots level and what we're seeing, there's been so much focus on infrastructure. And I think that the table is getting set for the next big thing in crypto. And obviously there was DeFi, and then there was NFTs, and I think people are wondering, hey, what's the next innovative breakthrough, right? What's this technology going to unlock? And I'm not claiming I have the answer, but I think we are absolutely going to see that next big thing, and it's going to happen, in this cycle. It could happen next year, and it could be a big unlock in terms of legitimacy of the tech, as well as onboarding. It's like, how do you get that next 100 million users? And so, whether it's in a sector which we like is, the DePIN space, decentralized physical infrastructure networks, or, earlier today, Luca from the Pudgy Penguins was talking about, intellectual property as a Trojan horse, and, whether it's in the art or cultural, aspects of crypto, something is going to kind of be this Trojan horse to bring in that next group of people. And we think there's a good chance it's on the consumer side.
It's a fascinating list right there from the both of you. So from my perspective on the institutional side, what I'm seeing is a lot of investors are now realizing they can use some of the same strategies they use to manage risk in their traditional portfolios in crypto, and particularly Bitcoin and Ethereum. What I mean by that is optionality. So covered calls, very simple strategy, done commonly in equities and commodities and foreign exchange, but now it's really ramping up in Bitcoin and Ethereum. And this is attracting a whole different type of investor to the space. And from there, you can build so much further. Actual risk management by selling upside optionality and buying protection for free from that upside optionality sale. That's bringing in a whole new wave of investors. Also, I'm seeing people say, John, how can I get involved in this space without chasing prices? And they say, I got dollars I want to deploy into the market, but I don't want to chase this thing. So what can I do? Well, you can sell covered put options. You sell a put option, you have an obligation to own the asset at the strike price. You're covering it with dollars. You're obligated to purchase Bitcoin at that strike. That's a nice way to come into the space without chasing the asset and getting a nice yield to boot. So that's been a big catalyst from my perspective. So we don't have much time. Let's keep going. Chris, I'm going to come back to you. 2024, what are you seeing? I'll give you some examples. Filecoin keeps getting talked. Storage. These are decentralized file storage protocols. Are you seeing stuff being built on? Is that getting interest? I'll give you another one. Decentralized internet access. Being able to access a VPN, not with dollars or a credit card, but through a cryptocurrency payment like Packet Cash, for example. Very interesting project. Are you having conversations on this type of tech, and anything else you want to talk on?
Yeah, 100%. I think there's this kind of new class of digital commodities, right? And really, when we use that phrase, we're talking about compute and storage and bandwidth. And if you can tokenize this kind of new form of a digital commodity, that really is going to be the lubricant for these new kind of digitally native economies. And what's great is they touch into the real world. So this fits into that sector theme when I was talking about with DePIN, using distributed storage, like a Filecoin, or on the distributed compute side, something like a render, which will help 3D artists and kind of gets into some of the artificial intelligence, being able to use idle capacity, GPU capacity to process, I think is extremely valuable. So I think we're going to see more of this trend. It's an area we really like, using token incentives to bootstrap networks that touch the real world. And I think this idea of digital commodities, and a lot of times people talk also, hey, where's the intersection between AI and crypto? And I think AI agents, what are they going to be paying for? They're going to be using digital commodities, and I mean, a unit of AI, it's already called a token, right? No coincidence, I don't think there. So I think we're going to see more of it.
No, I love it. And Tanya, I'll give you a moment here. But this artificial intelligence crypto intersection is just fascinating. I'm certainly not an expert at all on the subject, but what I've learned is there's such demand for compute power, and these centralized companies that we all know, Apple, the Apples of the world, Googles of the world, they're taking up all this compute power. So now we're seeing decentralized compute offerings pop up, like a Cash, or you talk about Render, and these are marketplaces where you can buy people's compute power, and you can pay them in a digital asset anywhere in the world, and you can access that compute to run your AI systems on. So that's fascinating. Do you have a comment, Tanya?
Yeah, I mean, I just want to briefly say, I mean, we're 2 minutes to close the panel, and it's the first panel that I've been in crypto that we haven't mentioned regulatory clarity. And let me just say, all these things are really important, but as I mentioned, I run our liquid crypto token fund. So for me, as long as we don't have clarity in what's a security, what's not a security, and what we can trade, I think that's going to be a headwind. But once we have that, and as I mentioned earlier, we are getting there, I think the flows into all of these things are going to be important.
Well, they certainly need to give us more than 20 minutes, and maybe for next year they can take a note, whoever's listening here. But Chris, Tanya, any final thoughts for the audience here?
Yeah, it just been in it for a long time on the personal side, and then seeing what we and some of our peer institutions are doing on the kind of institutional side, and we're excited. Like I said at the outset, we're really trying to play this game for the long run. We think this time around in this down cycle, the kind of existential risk to the industry is little to none this time around, and that's the first bear market down cycle where I've felt that. So just really encouraged by the developers building, the institutions coming on board, all the infrastructure and support, the regulatory stuff. It's a headwind, but as you also listed, it's also a positive catalyst. And so I'm hopeful we see some change there, but just general excitement.
Yeah, and as I mentioned, remember, the opportunity is there because all these regulatory headwinds, after everything that happened last year, the market is really underpositioned in the grand scheme of things. When institutional flows are still yet to come, when people are still afraid after everything that happened last year, when we're beginning to see the macro headwinds change, I mean, this is, I think, a really sweet spot for a good rally next year.
Yeah, it seems like capital has been on the sideline, and it's just going to add fuel to the fire. When this ETF launches, or if this ETF does get approved, it seems there's a lot of dollars waiting to be deployed. I don't know why it's waiting, but it's going to be fuel for 2024. So thank you both for having a conversation with us, and thank you all for sticking around and listening.
Thank you,
everyone.
John, Tanya, and Christopher. Wonderful conversation, very insightful, definitely worth 22 minutes next year. Just kidding, you get definitely more time.